Hello friends, welcome to my YouTube channel Simply Talks, and today I'm going to talk about Galaxy Surfactants, which is an interesting chemical play and can be accumulated around here. So let's get started with the analysis. Let's get going. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Galaxy Surfactants, here's one request. You can support me on Patreon. And once you do that, it will help me grow the channel, help you also ask me questions and accountants in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also for detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, you can join the YouTube membership and you get all the benefits of Patreon there. Now about the company. Established in 1980, Galaxy Surfactants provide raw materials to most FMCG companies. They provide salts and other raw materials for making the FMCG products. So you would understand that these products that they supply, their prices will increase with the commodity prices rising, so they will benefit going forward, but to an extent. If the commodity prices really go up like 120 130 rupees a liter oil, etc., then we are looking at trouble for even companies like Galaxy Surfactants. It is spread across 75 countries. A brilliant play on India consumption, because if you cannot buy something like a lever, Hindustan lever, Dabur, etc., because of cost pressures that they are facing, you can buy into a Galaxy Surfactants or the likes. 65 patents are given in the last 20 years, and the market cap of the company has grown to 10,500 crores from around 4 5,000 crores about a year and a half back. So it has nearly doubled. If you look at the financials, so these are December 22 numbers versus December 21. The sales went up by 38%, which is quite strong. The profit went up by 71%, very strong numbers. Low debt, high promoter and institutional holding with only 13% free float. That's the very positive sign. Dividend payout is pretty good. ROE of 23%. The margins have shrunk to around 10-11%, but normally the operating profit margin is around 15%. If you look at the performance, cost pressures are seen on margins. As I explained, the dip has been from 18 to 8% even in the margins, but it is improving now at the moment. The low was around 8% a quarter back, but the margins are improving, and that is why the numbers are. So you could understand that how the sales growth have impacted the bottom line numbers. There have been you can say an impact of other income also in there, but going forward I believe margins plus the numbers should improve, because it is like a commodity exporter or commodity presenter. So this is not somebody who use a commodity a lot, although there is a lot of you can say raw material that is linked to commodity, but they are exporting or they are providing products to FMCG companies which are more commodity linked, so they are going to benefit actually net going forward. Decent return ratios, strong sales growth, low debt, a high promoter and institutional holding. Higher crude may keep numbers in check, but overall, I think they'll benefit going forward with the higher commodity prices, because they are providing the raw material to the FMCG companies. If you look at the technicals, then there is strong support around the 2700 levels. Currently, it is now trying to break out of those 3000 region, and so it is looking extremely strong. The major resistance is around the 3000 levels. So stock is in a consolidation move, and above 3000 it will become extremely strong. So we are about to reach there. So stock looks like breaking out at the moment and could be traded above that with a stop loss of 2800 for a target of 3500. But from a 3-year perspective, it looks pretty good now on the charts. So may see an up move from here on in after a little bit of consolidation, because the markets have run up a lot. But after 1 or 2 weeks of consolidation or decline, a big up move is possible in the stock, and above 3000 it will become technically extremely strong. So what needs to be done? In my opinion, you can buy at current levels on dips to 2800 and keep track of numbers. I think a 3-year time horizon here is pretty good. I think 60 to 70%, 50 60% return over a 3-year period is very much possible. decent returns possible, and if you can buy on dips, then those returns will even swell up even more. But have only 4-5% exposure into such stocks of mid or small cap, because the volatility is strong in these stocks. So this was a video on Galaxy Surfactants. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.